Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, I'm Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamoen here. This is brought to you by Real Approved Incorporated, a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. So, Sandy, today we're starting with a big headline. The Bank of Canada has cut its rate to 2.5%. This is quite a shift, isn't it?
Absolutely, Steve. It's a significant move that could have a wide impact on both mortgages and housing costs. Generally, when the Bank of Canada lowers interest rates, it means that borrowing costs decrease. This could be a relief for those with variable rate mortgages or those looking to refinance, as their interest payments might decrease.
Right? And for potential homebuyers, this could mean more affordable mortgage options. But Sandy, we should also consider the broader economic implications. Lower rates are often used to stimulate the economy, but they can also signal concerns about economic growth or inflation.
That's a good point, Steve. While lower rates might be good for individual borrowing, they can also indicate that the economy needs a boost. It's a balancing act for the Bank of Canada to ensure that the economy remains stable without overheating or stagnating.
And let's not forget the impact on savings. Lower interest rates can mean lower returns for savings accounts and other investments tied to interest rates, which might be a downside for those relying on interest income.
Exactly. It's a mixed bag. While homeowners and buyers might benefit, savers might not be too pleased. It's all about finding that middle ground where the economy can grow without too much inflation.
So, in summary, while the rate cut might make mortgages more affordable in the short term, it's crucial for listeners to consider their personal financial situations and long-term economic outlooks before making any major decisions.
Yes, and it's always a good idea to consult with a financial advisor or mortgage broker to understand how these changes might specifically impact you. As always, staying informed is key. So, Steve, the latest report highlights a concerning trend for homeowners in Canada, especially in regions prone to wildfires. Insurance premiums have skyrocketed, putting additional pressure on mortgage budgets.
That's right, Sandy. In places like Kamloops, British Columbia, insurance premiums have nearly doubled between 2023 and 2025. This increase means that insurance now takes up a significant portion of homeowners' monthly expenses, almost a tenth of a typical mortgage payment.
And it's not just Kamloops. The report, which analyzed data from 21 high-risk markets, shows that the impact is even more severe in places like Medicine Hat, Alberta. There, the average monthly insurance premium amounts to nearly one-fifth of the typical mortgage payment.
Exactly. And in Wood Buffalo, which includes Fort McMurray, premiums have climbed to 16% of average mortgage payments. This area is still haunted by the memories of the devastating 2016 wildfire evacuation.
Insurance costs are rising faster than home values in these wildfire-prone areas, which is directly impacting housing affordability. The CEO of My Choice, Aaron Mirzayan, pointed out that climate risk is rapidly becoming a key financial factor for homeowners.
And it's not just the insurance premiums. The Insurance Bureau of Canada reported a 379% increase in annual insurable losses over the past decade, highlighting the broader issue of more frequent and severe weather events.
Yes, and these pressures come as Canada experiences some of its worst wildfire seasons on record. The Canadian Climate Institute noted that 2023 was the most destructive year ever, and the trend continued into 2024.
With insurance costs spiking by an average of 12% nationally since 2023 and property values climbing in most wildfire hotspots, household budgets are being stretched thin.
It's a challenging situation, Steve. In Kamloops, for instance, home prices rose about 10% over 2 years, exacerbating the impact of rising premiums. This makes it even tougher for homeowners to manage their finances.
And while some areas like Kenora saw a decline in home values, most regions are facing increasing costs, which is a significant concern for homeowners.
Our next topic is about the ongoing challenges faced by first-time homebuyers in Canada. Despite a decrease in home prices and mortgage rates in many markets, affordability remains a significant hurdle.
That's right, Sandy. While bidding wars and skyrocketing prices might be less prevalent now, the latest research from ratehub.ca indicates that affordability has actually worsened in several major markets, including St. John's, Fredericton, and Edmonton.
Even in cities like Toronto, Hamilton, Vancouver, and Victoria, where there's been a slight improvement, buying a home still requires a six-figure income. In some of these places, like Toronto and Vancouver, you need to earn over $200,000 to afford an average home.
The Canadian Mortgage Summit held recently in Brampton brought together industry leaders to discuss these issues. Natasha Taylor from Lenfinity pointed out that the skyrocketing cost of living makes it incredibly challenging for first-time buyers to save for a down payment.
It's become increasingly difficult for first-time buyers who can't rely on selling an existing home to fund their purchase. And the bank of mom and dad isn't as viable an option anymore, especially post-pandemic with rising interest rates.
Marianne Taggio from Requity Homes suggested looking into more innovative solutions like rent-to-own programs. She believes this could be a viable option for those who are maxed out on their gross debt service and total debt service ratios.
Exactly. Marianne emphasized the importance of getting those who have been turned away during the mortgage application process off the sidelines and into the market. She mentioned generations from X to Z and self-employed individuals as key demographics that could benefit from these programs.
Natasha Taylor also stressed the importance of brokers engaging in pre-approval conversations early in the mortgage journey, even if the clients are not ready to buy right away. This can help them be prepared when the right opportunity arises.
It's about keeping them informed and ready so when the market conditions are favorable, they're not scrambling to get everything in order. This proactive approach can make the process much smoother and more enjoyable.
Alfonso Casiato from Radius Financial highlighted the increased mortgage insurability limit to $1.5 million as a positive change. He also emphasized the importance of strong broker-lender relationships to navigate these challenging times. Sandy, there's a new analysis from the Canada Mortgage and Housing Corporation that draws some interesting parallels between the current Toronto condominium market and the crash of the 1990s. It's a fascinating topic considering how much the market has evolved since then.
It sure is, Steve. Back in the 1990s, the Toronto real estate market experienced a significant downturn, with a sharp decline in condominium prices. The current market dynamics are certainly different, but understanding these parallels can help us anticipate potential risks.
Right. And according to the analysis, one of the key similarities is the rapid increase in condominium supply, which has been outpacing demand. This was a major factor in the 1990s crash, and it's something to keep an eye on in today's market.
Absolutely. But it's also important to note the differences. For instance, today's market is influenced by global factors and a much more diverse buyer base, including significant foreign investment. These elements weren't as prevalent in the 1990s.
That's a good point, Sandy. The global economic landscape and the role of international buyers could either stabilize or destabilize the market, depending on how these factors evolve. The analysis suggests that while there are risks, the market is also more resilient due to these diverse influences.
And let's not forget the role of government policies and regulatory changes. In the past, there were fewer safeguards in place. Today, measures like the mortgage stress test and foreign buyer taxes can help mitigate some of the risks.
Exactly. The stress test, for instance, ensures that buyers can afford their mortgages even if interest rates rise, which provides a buffer against potential downturns. This kind of foresight wasn't as common in the 1990s.
It's crucial for potential buyers and investors to stay informed and consider these factors when making decisions. While history can provide valuable lessons, The current market requires a nuanced understanding of both local and global influences.
And as always, consulting with real estate professionals and financial advisors can provide personalized insights tailored to individual circumstances. It's all about making informed decisions in a complex market environment.
Steve, Toronto's housing crisis is a hot topic, and Toronto Life recently brought together 6 experts to discuss potential solutions. The panel included figures from various sectors of the housing industry, like development, social housing, and city planning. They had some interesting insights on how to tackle the city's housing woes.
That's right, Sandy. The panelists, including Andrew Boozery from the Gattuso Center for Social Medicine and Brad Carr, CEO of Mattamy Homes Canada, emphasized the need for bold, comprehensive strategies. They argue that incremental changes won't cut it anymore.
Exactly. Brad Carr highlighted the need to build more housing of all types to balance demand and supply. He pointed out that short-term thinking often hampers long-term solutions, as politicians may avoid bold moves to ensure re-election.
And Andrew Joyner from Tricon Residential stressed the importance of a coordinated approach across all levels of government. He mentioned that different policies often work against each other, likening federal policies to a humidifier and municipal policies to a dehumidifier in the same room.
Vic Gupta, CEO of Create.to, also called for alignment among federal, provincial, and city governments. He noted that, while the federal government has promised significant investments in housing, delays in budget approvals have hindered progress.
It's clear that bureaucracy and misalignment are major hurdles. The experts discussed the need for development charge reform and streamlined approval processes to accelerate housing projects.
Karen Chappell from the University of Toronto emphasized the importance of bold leadership. She argued that cities like London and New York have shown that bold moves can lead to re-election, challenging the notion that boldness is political suicide.
Another critical point was the need for investment in social housing and addressing homelessness. Andrew Buzeri highlighted the health implications of homelessness, noting that people experiencing homelessness live significantly shorter lives.
That's a crucial aspect, Steve. Buzari argued that housing should be seen as a human right and a health issue. He emphasized that investing in housing can reduce costs in other areas like healthcare and policing.
It's a compelling argument. Brad Carr also mentioned that investment in housing isn't just spending, it's reallocating funds that could lead to savings elsewhere in the system.
The panelists also discussed the potential of modular housing. Brad Carr shared insights on how modular homes can be an efficient and cost-effective solution, offering a replicable model that can be quickly implemented.
Yes, Carr mentioned that modular housing allows for faster construction timelines and potentially lower costs. He noted that while it's not a silver bullet, it could be part of a broader solution to the housing crisis.
The conversation also touched on the mismatch between the types of housing being developed and what consumers actually need. The panelists highlighted that many new condos are too small for families, contributing to the affordability crisis.
Jason Thorne, Toronto's chief planner, pointed out the need for more family-friendly housing options and better utilization of public land. He emphasized that it's about offering multiple price points across the housing spectrum.
And as the panelists noted, it's not just about building more, it's about building smarter. This includes considering the quality of design, public spaces, and infrastructure to create livable communities.
Ultimately, the experts agreed that while there are no easy solutions, a multifaceted approach that involves all stakeholders is essential. They stressed the importance of moving beyond pilot projects to scalable, impactful initiatives.
Now, Steve, there's some exciting news in the mortgage industry, with AKAL Mortgages rebranding as AKAL Canada. This move marks their national expansion, and it's quite a significant development for brokers across the country.
Indeed, Sandy. AKAL has been a key player in training brokers in Ontario for 25 years, and with this expansion to AKAL Canada, they're offering brokers nationwide access to their comprehensive training and development model. It's a big step in their efforts to set a higher standard in the industry.
Right, Steve. The co-founders, Mohinder Pal Singh and Kuljit Singh, emphasized that this isn't just about scaling their operations. They see it as an opportunity to make a lasting impact on the communities they serve by empowering brokers to operate with an enterprise mindset. They're calling these brokers brokerpreneurs, which is an interesting term.
Absolutely, Sandy. The term brokerpreneurs reflects their goal of nurturing brokers who can grow into leaders and eventually own their own brokerages. AKAL's model includes a 5-day boot camp and ongoing education, which is crucial for brokers to stay competitive in the ever-evolving mortgage landscape.
And it's fascinating how Mohinder and Kuljit started their journey. They both came to Canada in the same month in 1992 and met as classmates studying quality engineering. Their shared experiences led them to create a brokerage model that emphasizes training and mentorship, filling a gap they identified early on in their careers.
That's right, Sandy. Their approach has been to provide the training and support they wish they had received when they entered the industry. This dedication to mentorship and education is something that sets AKAL apart and is likely a big reason for their success.
And now, with the national expansion, AKAL Canada is poised to help brokers establish their own teams and brokerages across the country. It's about creating a legacy not just for the brokers, but for their families as well. This expansion is supported by strategic partnerships with organizations like M3 Group and Mortgage Alliance, which will undoubtedly bolster their efforts.
Exactly, Sandy. The backing from M3 Group's Luc Bernard, who praised AKAL's professionalism and integrity, highlights the confidence the industry has in AKAL's vision. This move to a national stage is not just about growth, but about driving success together with their partners and brokers.
It's a bold move, Steve, and one that could really elevate the standard of mortgage brokerage across Canada. As AKAL Canada rolls out its programs, it'll be interesting to see how this impacts the industry and helps brokers nationwide.
Definitely, Sandy. It's an exciting time for the mortgage industry, and AKAL Canada's expansion is a testament to the evolving landscape. As always, staying informed and adapting to these changes is key for anyone involved in real estate and mortgages. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time, and stay informed with the latest industry insights.